Good morning, this is Ron Brown. It is the 29th of April 2022. This is going to be my weekend report, but I'm going to do something different today. I'm going to record this in segments at different times throughout the market day just to see how this works out. This is experimental. We'll see what happens. Okay, my standard risk disclaimer, it's a short one. The most important line here is all trading strategies are used at your own risk. And any stock, index, or ETF mentioned in this presentation is not a recommendation. But this line right here, if you trade, you have to take on risk, and it's at your own risk. Now the market's going to open in 2 minutes. Let's just take a quick look. You can see the futures. The Nasdaq Futures are down. So the Nasdaq Futures are trading down 165 points approximately. You can see over here in this 78-minute chart where they are. I'm going to maximize this. And this was a strong run up yesterday, and then there was some profit taking at the end of the day. The Amazon earnings came out, and that's what really hit the futures hard. And then you can see there was some rallying overnight, but now they've come back down. Not quite to this point yet. But traders are looking for follow through. There's the opening bell right now. So I'm going to restore this. And let's just take a look at a few stocks here. This is the monthly, the weekly, the daily, and the intraday. I'm going to bring up Amazon. And you can see what happened to Amazon after the earnings report, after hours trading, rallied a little bit, and now it's heading down again. This is a monthly chart of a monthly engulfing pattern that has engulfed everything else, and then the weekly chart. These have broken support, as you can see. Here's the gap down on the daily, and we'll see how much further it has to go, but the monthly support is broken. Here's the high, here's a lower high, there's now a lower low. That's not a good sign for any index or stock. Let's see what Apple's doing. I believe Apple warned of issues with the supply chain. This is yesterday at the close. It was clear up to 169.99, sold off to 153.50, and here's where we're trading now. It's gaining a little bit of upside momentum today. Now looking at the monthly chart, this is the anchor chart because it's the longest term. You can see that here's a higher high, here's a lower low. Now this low would have to be taken out here around 149 for the monthly to go into a downtrend on the monthly. The weekly, here's the lower high right here. Here was the lower low right here. This is low. It would have to take this out to start trending down weekly. Daily chart. Here's the high. This could be considered a lower high, and this was a lower low. Came all the way down. Came back up, formed a short-term high here. Didn't hold, came back down. This looked like it could be a higher high, but it didn't hold during the day. So consequently, it came all the way down to 156. Here's our daily chart today. You can see that there was a strong move yesterday, but until this high is taken out here from yesterday, this would be a higher high coming off of this low, because the low is established here, formed a very short-term high. It's pulling back today, so this could be considered a lower low. This would be showing strength if it takes this area out right here. And here's what it looks like on the 78-minute chart. Big move down after earnings were announced. So this is all intraday overnight. Here it formed a low, and it took out this high. So on the 78-minute chart, it is now in a very short-term uptrend because it took out this high. What I'm showing you here with these examples are a multiple time frame analysis and fractal charts. These are fractals because the 78 builds into a day chart, so all of this activity from the close yesterday, which was right up here, this is yesterday, and the overnight doesn't show in here, or the pre-market, but this is the next day. So a takeout of this high, if this continues to build, that would be a new high. This part here, after hours, I would just disregard because we look at daily and weekly charts. This stuff doesn't show up in the historical charts or the longer term charts. So, of course, you know, this is subjective. It's how you see it. Sometimes they really stand out, but other times they don't. Now, here's Facebook, which reported very good earnings 2 days ago. This was the impetus for the strong market yesterday. Here's the daily chart, but let's look at the monthly first. Here, you can see that in a monthly chart, this is in a long-term downtrend. Now, if it down here, here's your low. If it would have to come back and take out this high here from the prior month, it'd have to close above that, which would be a higher high than this one. So it would have to come. This would have to come all the way back up above here. Then ideally there would be a slight pullback, and then this high would be taken out and it would be trending up. Until then, this is in a long-term monthly downtrend. Let's take a look at the weekly. Came all the way down. Here's a low. Here's a high. Came all the way down here. It would have to take this area out, which would be the higher, which would establish a higher high. Then it would be trending up. That is on the weekly chart. Daily chart, if you look over here, this area here is equal to this area. So on the daily chart, here's your low. Here is a high from yesterday, and it's taken that out so far today. But in my estimation, it would have to take out this high here to really form a higher high, and that's up at in the 218.44. Like I said, this is subjective, but what you're looking for are higher highs and higher lows. Now this big gap, this is very strong here on strong volume, and you can see a lot of traders are getting in here, and it's really apparent over here in the 78-minute chart. So gap up, here's a low, here's a high, pulled back, here's a higher high on the 78-minute chart. So it is trending up in the 78-minute chart. You know, there's all this talk about indicators. People spend a fortune on indicators, and really you just need to learn to read charts and what they stand for. Price and volume, that's the basis of everything. You don't need to spend thousands of dollars on indicators or other platforms. Everything you need is really in Thinkorswim and HCSI. Now let's take a look at the composite. No volume on the composite. So the monthly chart, it tried to break down here. This support has held so far, but if it does break down on the monthly chart, we can go a lot further down. Here's the weekly. You can see there's a long-legged doji formed on the weekly chart. This level has held. It was broken, but it came back through it. It was broken on the close on the daily chart, but it's bounced back. Now on the weekly chart, there's a lot of work to repair before we would be in an uptrending market. It's going to have to surpass this high right here. On the daily chart, let's see, what's this level right here on the weekly chart? 14,643. Boy, that is clear up. It's not even showing on my screen. So on a weekly chart, if it does take out yesterday's high, that could be considered, in my opinion, a short-term uptrend. Here's what's happening today on the 78-minute. It gapped down, rallied up, and now you can see that it's backing off again. Thing about these markets, you don't want to be in too early, nor do you want to get in too late. So you have to make a value judgment. What's the trend? The monthly held, the weekly is down, the daily is down, but if it forms a short-term high here after this low, you could consider that as being in an uptrend, and the same thing goes for here on the 78-minute. But it's backing off again. It's down 132 at this point. Let's take a quick look at some of the internals, and then I'll end this video. Okay, you can see the E-minis. They rallied some this morning. Now they're going down again. These are 5-minute charts on the E-mini and the Nasdaq. These are bonds. Here's the advanced decline line. The high was minus 362. Decliners over advancers, and that's on the NYSE, and on the Nasdaq minus 102. And now they're turning back down. Too early to really get a volume read here. This is the S&P 500, the number of advancers versus decliners. Yeah, there's 206 more decliners than advancers, so we're seeing weakness once again in the market. You can see the ES is selling off, and the NQ is selling off. Very dangerous market, as you can see. One more thing. I was going to stop, but I'll show you one more chart. Here it is. The comp. This is a daily chart up here, but this information down here is a 15-minute chart, as you can see right here. This shows advancing issues versus declining issues, or the breadth on the Nasdaq and the NYSE. It was positive yesterday, but you can see that today on the 15-minute chart, it's negative on both of these. That's it for this segment. I'll be coming back with some HGSI segments. We're 18 minutes into the trading day. Let's take a look at things through the lens of HGSI. Now, these are my major markets. You'll find them in the market analysis user groups in this top folder. These intraday prices are good, with the exception of the Nasdaq Composite, because that data comes out at the end of the day, and you can see, or not at the end of the day, in the overnight download, and that information is not valid right during the day, or right now during the day. So if I move over here, this is what it looked like yesterday. You can see that on the Nasdaq, but these other numbers are good, and I'm going to move to a different I'll use this chart. You can see everything. The transports are down slightly. Here's the intraday range on these. Let's see what's near the top. Well, can't count that one. So let's use the Nasdaq 100, see where it is. It's down 1.34%. This is what we saw in the using the Thinkorswim platform. And here we are. I'll zoom in on this a little bit. Just hold your alternate 1 key to zoom in. You can see that there is a star being formed. It's also an inside day. Not a lot of conviction here. Now, it just updated, and you can see updated in the background. I have Thinkorswim updating every 5 minutes, and you can see now it went from the star to some buying pressure. But what's important about this chart is, even without volume, and we have no volume on this, is the moving averages, and you can see that the 3-day exponential moving average is still below the 6, and the index itself is below the 200, the 100, the 50, and the 18. So the trend is still down. So you're fighting a downtrend. These histograms here show the relationship of the 3 and the 6, the 6 and the 18, and the 18 and the 50. So all three trends remained down. Now there's nothing in the VPOC, volume point of control, because there's no volume and there are no volume bars here. So rather than looking at this, let's just move over to the QQQ, which gives us pretty much the same chart, but now we have volume. Now this is projected volume based upon the very short-term early market volume is high, but this will shrink as the day goes along. It's just looking at the early buyers, and then it will go down. Now you can see the volume point of control, which is a shorter-term indicator, is positive. It turned green on this big move up. Now, this has to surpass yesterday's high to even be considered in a move that is sustainable to the upside, and it may not mean further movement, because all movement in the stock market is really random, and I'm sure you found that out by now. I say that because there are no guarantees from one day to the next. Yes, you can look for trends, you can look for VPA flags, you can look for candles, and you can put the weight of evidence on your side, which is what you have to do, or you'd never make a decision. But there are absolutely no guarantees, as we saw last night, because it certainly looked good yesterday, and then the earnings news came out, especially from Amazon, that really whacked the market. Now, can that be overcome? The bulls certainly hope so, and I do too, because I'd hate to see this market continue to break down. But let's see what are the positives here. There, I see immediately, even on this short-term chart, even though these moving averages are all down, we have support in this area. This was stopping volume. It was tested, this area was tested again here, and it held. Here it didn't hold, but it didn't continue a massive breakdown. You can see it was penetrated right here, and then day before yesterday it tried to come up, and then it was sold off on relatively heavy volume. But we're seeing some signs of encouragement. Now if this can go up, that 3 can go above the 6, that would be a short-term move to the upside, because this histogram would go positive. Now I'm spending time on the Qs and the Nasdaq. Why? Because those are the indexes which have been most battered in this sell-off, and if they can hold and start going up, there may be a chance that the bottom is in. Now let's drop down here to the major market ETFs, and I'll go down to my ETF intraday. Let's get a feel for what's happening in the market right now. Sort on raw combo. You can see the ARK funds are up today, and they have really been bad, or the ARK funds, and they've really been battered, so that's an encouraging sign. Let's just take a look at ARKK, which is, I believe, the most widely followed. And you can see there is a stopping volume candle here and a white body, but the 3 is well below the 6. Same for the 6 and 18 and the 18 and 50. VPOC is still negative. Projected volume is high today. But like I said, this is comparing the early morning volume to yesterday, so we'll see if this works out. But looking at a longer term perspective, you can clearly see that this stock, or this ETF, is in a strong downtrend. And when it tried to rally here, what did it do? It got up to the 50 and was rejected at the 50 and came right back down. Okay, I'm going to go into my designer. You can see it's updating in the background every 5 minutes using Thinkorswim. There's no need to pay for an expensive data service. Everything you need is right here. I'm just going to click on this. What I'm going to do, first of all, let's go into the industries. I'm going to rebuild the indexes and groups. This is rebuilding the industry user groups with the current data. These indexes are built from the stocks, so whatever we see will be current. And then I'm going to go down to my major market analysis user groups. I'm going to 3B, indexes and sector. Notice that there is a filter on, nothing showing here. If you click on that filter, hold your shift key. You can either click on the filter and scroll down and select no filter, or you can use a shortcut key, and that's what I always do. I click on my shift key and click on that, and that disengages any filter. Look for the indentation. Now the stocks are updating, that's why it's taking a little bit longer here. So these groups come up, and what I want to do is I want to compare these groups. I'm sorry, I got the wrong one. I want the sectors and the indexes, so I'll go in and rebuild those again, rebuild the major indexes. These are indexed according to market cap weighting, and I use 2 years. You can change that on your the main menu under Preferences, Global Index Options. I use a relative start date of 104 weeks, 2 years, because I want to see 2 years, and I select market value weighting rather than equal dollar weighting. I'm going to cancel that so I don't have to rebuild everything. And now let's look at these groups here. I'll click through here, but then I want to go to my HGSI analysis view. So let me close this up so you can see where I am. Right here, top-down scorecard views for HGSI. And I'm in number 1, which sorts on the raw combo, percentage price change 1 day, and you can see the materials is at the top of the list, followed by consumer discretionary and energy. Small caps are doing well, so we're getting some strength coming in, it looks like. Well, the techs are still kind of weak, but they're not as weak as they were. But here is the index, which contains all of these other indexes, and you can see these are trading above it. And there is some green here. So let's just take a look at that materials. I'm going to change to that index group. And then I'm going to move down to my daily prospecting scans. I want 1A, which is intraday. And you can see there's a lot of green at the top. Why? Because this combo, and this is one of the most powerful features of HGSI. I've set it up to give 50% of the weight to the intraday 1 day change and 50% to the range. There's no volume in here. I'm just looking for price and range, and you can see that ITRG is at 100% of its daily range, and it's up 5.56%. Precious metal. This is specialty chemicals. Let's just look at these charts. Just because they're up for the day doesn't mean that they're a buy. That's when you look at these charts and you look at the fan. First, start at the top, look at the group. Group rank is strong, 91, and it's turning up today. Here is a selling climax. This is a $1.15 stock. Here's a test, and it's up today. That's 5%, I guess. But all the trends are clearly down. It's strictly a bottom fish. Let's look at the next one. Same thing, but this one looks a little bit stronger. Loop Industries. The earnings are not coming out until June. Been losing money. There's no revenue. Specialty chemical. But some people must feel that it's worth buying. Effort to sell. VPOC still negative. The 3 is about ready to come up through the 6. Today you can see right here. Here's a low volume test. Still, everything's down on this as far as the trends. The group is up. Maybe that's why it's moving up today. This slipped all the way down to number 22 on the last update. Now you can spend a lot of time going through these and looking at these. If you want to start eliminating some and only looking at stocks that are in an uptrend, there are several things that you can do. Or if you want to look at stocks that have crossed over the 3 and 6 and so on. So let's just go to 4A here. VPOC 1010 is positive, 2-day window, intraday. These have crossed over. How do I know they've crossed over? Because I can look down this column right here. 0 means they crossed over yesterday, and 1 means they crossed over the day before. Now if we look over here, you can see that these are up. How do I know if the fan is up on these? I can go over to the right, see this EMA fan uptrend. If I sort on that, these are the stocks going down to this level where the fan is up. Let's scroll back and let's see if any of these with the fan up are doing much. This looks like the best one, up 87.88 of its daily range, and that's Boise Cascade. Let's just take a look at Boise Cascade. See the group not doing all that well, 52. Bring this up. Earnings are coming out soon, the 5th. Let's look at this chart in its entirety, and you can see that this is one of those stocks that would drive you absolutely crazy because it cannot get past resistance. Look at this. Every time it gets up here, it falls back. But maybe for a short-term trade, you could look at it. The 3 did go above the 6. I know that because it came up in the screen, and it looks like it wants to go higher. Earnings were good last quarter, and the current projected earnings are 85% above the same quarter 1 year ago. But I just don't like the looks of this chart. What I do like about it in the very short term, and it's actually past the buy point, is this here was a low pivot, and yesterday when it took out that high, that was a buy, a very short-term buy. Let's go down to another chart here. See this one right here, 1B, potential low pivots. You can see there was a low pivot here. There was a low pivot here too, but there was no buy here. This one, if it took out the prior day's high, which is kind of late, was a buy right there, or could have been bought if it took out this high from the previous day, which it did yesterday. It opened here, traded down, and then back up. But a true pivot confirmed buy would be above the prior day's high. Okay. I want to bring another chart into play here. This is my Wyckoff information, the way I build it in HTSI, and these tell me that there is lack of supply with the yellow charts, and the light green volume has not been great, but stocks can go up on light volume, as you see here. Look at this volume. It's light, but they can go up. If you want to know what these color bars mean, you click on this Choose Create View, and it tells you right here. Narrower price spread, lower volume, lack of supply, and the light green, wider spread on lower volume, lack of supply. So there's just not supply. There's no great demand, but there's no great supply, or this stock would not be going up in the short term. Okay, I'm going to end this segment. I'll come back later in the day and look at some things. Actually, before I end the segment, let's just go in and look and see what's going on here. The comp really isn't doing anything. There's that AARK. The Dow is down to... So you can see how quickly this market changes. Here's a 78-minute on the S&P 500. Tried to rally up. did rally up, and then it is starting to fall again. Dangerous, dangerous market. So just be careful. One quick look at the internals. And you can see what happened here on the 5-minute chart. It rallied up, and now it's actually at the low of the day. It's holding the low so far. But you can see what happened with the advancers and decliners. Minus 626 on the New York, and minus, where are we here? It's actually 125 positive on the Nasdaq. Crude lights going up, which is not good. Wow, it's back up to 107.24. And the number of decliners in the S&P 500 outnumbers the advancers at 282, minus 282. Ticks and ticky are very short-term indicators. It's by tick, and this is for the Nasdaq. This is for the NYSE, and you can see that these have fallen off rapidly. Okay, that's it for this segment. I'll come back and finish up this video later. This is a continuation of the video that I was doing this morning. This is Friday the 29th. Let's see, it's 10:55 a.m. Central Time. Let's see how the market is doing. The Dow's down 303, but it's off of its low, as you can see. Here's the daily chart over here, just kind of doing nothing. Going back and forth. The S&P 400, similar. You can see the range on these. That's the S&P 500, the 600. It's actually above its open, but look at the long range on long range days. Just uncertainty all the way. Here's Bitcoin. A lot of talk about Bitcoin. You can see it opened here and is right here. It's been lower today. And let's go to the Nasdaq Futures. They have fallen off dramatically. This is the daily chart. Opened here, traded up to here, now trading near the lower end of its daily range. So as you can see, the market is chopped. It's really choppy. But I want to point out is there are things in HTSI that you can do to see where the strength is. So I'm not going to talk anymore about Thinkorswim. Instead, I'm going to show you what to do. This has been updating in the background. I'm going into Tools after I go to my industries and select Rebuild Indexes and Group. This is bringing my groups up to date because I need this for the next scan. So I'll rebuild these, and then I'm going to rebuild my user smart groups by going under the Tools, select Rebuild User Smart Groups. This takes 30 seconds or so on my computer. I've got a lot of user smart groups that I experiment with, so it's certainly not immediate. Okay, it's finished. So if you come down to my user smart groups, select Intra-day Bullish, these two groups are a couple of places you can look to see where the strength is. It says rebuild the industry groups first, which I did, and then I'm looking for stocks that have an 80% EPS rank and an 80% relative strength rank, or if you want more stringent, you can do 85-85. This has 83 stocks. This has 64 stocks. So let's just use the 85-85 just to cut down on the number of stocks, and then I'm going to click through to my warehouse view. I'll go up to the top by clicking up here in the left hand corner. I'm sorted on the industry percentage price change 1 day, and you can see where the strength is. Now I'm not familiar with U-Auto. Let's bring it up. Okay, it's up for the day, but it's a negative candle at this point, so it gapped up, and you can see without even looking at the chart, or before you look at the chart, if you look here, that it's trading at only 9.9% of its daily range. Tesla, the other stock in this group, is at 49.83, so I'll bring Tesla up. But what this does is it looks for stocks that have a decent EPS rank and a decent RS rank, and it ignores the group rank, because I'm looking for groups that are moving today. I don't care about the long-term group rank at this point. I just want to see where there is some strength today. Now when I ran these are all up. You can see how quickly the market changes. Some of them have fallen in price. But what are the dominant groups? As usual, exploration and production and marine shipping. These groups have both been strong. Exploration and production for a long time, and the marine shipping in and out. It's barely up today, but the stocks are positive, or they wouldn't be in here. Where do I want to look? I'm just going to use this GSL as an example, because it is in the green on the intraday range. It's up 98 cents, and I'm sorry, not 98 cents, 0.98%. And I want to bring it up and take a look at it. Okay, I'm using my 1B chart, which has the low pivot. You can see there was stopping volume on the low pivot here, but this was not surpassed. Now on this one, this high surpassed this high, so that could have been a buy on that coming off of this low pivot shakeout, and it looks like it wants to go higher, but the short-term trend is still down based on the 3.6. The 618 is down, and the 1850 is down. So what you're doing here is you're looking, or what I'm looking at is a stock where the trends are still down, but it's setting up. Now look at the group. It's flat today. It's got a group rank of 94 though. Look at the earnings on this stock. The blue is the earnings line, and the red is the revenue line. Just tremendous earnings coming into these stocks. Look at the PE, 4.71%. I know nobody looks at the PE anymore, but it's amazing. Has a dividend yield of 4.4%. So if you're looking for a yielding stock that's making money, and it looks like there is support, especially with this stopping volume, and it's holding up here, and the group has good strength, this is the candidate. Just remember, you're fighting a stock that's in a long-term downtrend, but fundamentally this is a very strong stock. Let's look at one more thing. Current quarter estimates, 190, and that would compare to 55 1 year ago, and the next quarter estimates 186. So they're predicting very strong income for this stock. These are all things you really need to take into consideration when you're looking, but my primary reason for doing this is to find stocks and groups that are going up using the 85-85 scan intraday. Let's take a look at exploration and production. I'm trying to find one where the percent range is holding up, 79.03. Let's look at this stock. Now this is a nice setup. All of these blue lines were low pivots. Now this one didn't work out, but this one did. Low pivot, buy right here. Low pivot, buy right here. Low pivot, buy when it took out that high, and if the stop is under the low of it's up to the low here, that's where your stop is. So this chart is in good shape. This stock is in good shape. Fundamentally, it looks really good. The revenues and EPS in a weak market day, but just because the market's weak doesn't mean there isn't strength, and you can see that there is strength. Now look at all of these that have gone negative since I ran this. And I can see where they're going negative because as I've been talking, the Nasdaq has broken down, and it's down 320 points right now, the Nasdaq Futures. So market is under pressure. That's it for this segment. I just want to show you that even in a weak market there is strength, and you need to look for good setups. I know the odds are against us, so even in strong groups when the market gets really weak, because the psychology changes. People get scared. Even if they have a nice looking stock, they may have short-term profits and they want to get out. So that's why we're seeing these changes in price as the market updates. I'm going to do an F5 and let's see if we see some more red coming up here. This is updating just this view. And you can see there's some more red that came into it just during the past few minutes. Okay, that's it for this segment. I may do another, but the market just closed and it was a brutal day for the bulls. If you recall, when I ran this smart group, the user smart group, the 85 stocks, all of these are green, and I just left this page open when I walked away from the computer a couple hours ago. It at the end of that video, I believe there were 10 stocks that were showing red, and then I updated it at that point, or looked at it again. I think there were 18, and look at this. All of these stocks that were doing well today, or they were positive at least, have turned red. The lesson here is don't fight the market. Stocks that looked good early failed. If you look down this percent range, you can really tell that. Here's one that closed at 2.71% of its daily range. If I sort on this, only Stride held up. And this is a stock I've been looking at. In fact, I may take it if the market settles down. The earnings are out, and it gapped down. Notice the low pivot here. And it has been moving up ever since. The 3 has stayed above the 6, and it looks pretty good. That's one that can go in a watch list. But most of these other stocks took a really sound beating. Look at this shipping stock, down to 0% of its daily range. So, like I said, once again, don't fight the market. I'm going to pause this video and run my user smart groups again, and let's just see how many, if any, are in there. I'll update the indexes or the industry groups first, and then take a look at this. There were 64 stocks before, and because the industry group has to be up and the stock has to have an 85 ranking, there's nothing there. Let's go into the industry groups quickly. I'll click on this. Now I'm going to go up here under my top-down scorecard views for HCS analysis. HCSI index is up today, 2. And the e-commerce and the transaction management. I think this one's up because of BABA. Going to change to the industry group, and then I'll drop down percentage price change up. Well, several of them were up. The Chinese stocks were up today because evidently there's going to be a rule change. So that is why this index was up today. So what I did is I just went down to the number 6 view. Here's where I was originally. And then I went down to the 6th view, and it shows the stocks that were up today within the group. Now, if I go back and go to the HCSI up indexes today, you can see that there are 2. How many were down? 172, and one of them must have been unchanged. So it was a brutal, brutal day. I'm going to switch over to Thinkorswim, but I want to see which groups were down the most. Insurance brokers, department stores, semiconductor devices, which is no surprise, insurance, private equity, telecom, more semiconductors. Okay. Where was the strength? Let's see if there was any strength in these major market ETFs. So I'm going to go to my ETF analysis and go to my intraday, sort on raw combo, and look at the UVXY shot up volatility. And those ARK funds that were up early in the day, look what happened to them. They all collapsed. Bottom fishing is a very dangerous business. Everybody wants to get in early, but you really have to make sure that there is some momentum to the upside, especially in your groups. Now, there are always some groups that are going up normally, but on a day like this, you just don't see it because the market's been overwhelmed. Only those Chinese stocks, and you won't find me buying Chinese stocks. I just don't trust them. I prefer not to buy them. Let's just take a look at BABA. Yes, it was up today, but let's take a look at the monthly chart. At one point, it sold for $319, as low as $73.28. It has bounced up to $118 on a monthly chart. This is the weekly chart. This is the daily chart. You can see that it started turning around the other day. There have been some VPA flags on it. Gap up. It looks like it opened here, and then here is where it closed. You can see it much better here on the 78-minute chart. Big gap today on the news. Here it is. Chinese internet stocks are off to the races after a possible delay in new rules. Can it last? Who knows? But the speculation is. Okay, I just wanted to point that out since that stock out since this was the only group that was up today. Look at this. The Dow down 2.77, almost over 900 points, 272 on the 400. 363, 3.63% on the 500, 2.58 on the 600. Let's go down to the comp, down 4.17%. This index is really in trouble now because it's broken support on the weekly chart. You can see the support here. It broke it, so it's established a lower low. That is not good. It's also broken support, of course, on the weekly and established a lower low. And the daily, same thing. You can see where it opened today and it rallied up here, and then it failed, broke support, and of course on the 78-minute chart, there was the first period was good, and then it's been downhill. Now I've switched over to my flexible grid. This is a 5-minute chart of the ES futures and the Nasdaq futures, and you can see that about, while that was 8:20 this morning, it's been going down ever since. On the 5-minute chart, here's your lower low, here's your lower high, lower low, lower high. Why don't I maximize this so we see it better? Okay, here's your high, came down, here's a low. Here's a lower high when compared to this high up here. Lower low, lower high, all the way down here. Well, this would be a low here. This could be maybe considered a low. Lower high here, though, a price rejection. Price rejection here. Here's a established a low. It couldn't go any higher, and then it came down, formed the lowest low here, and then it rallied a little bit slightly after the close. And here's a high and there's no lower low established yet. But you can see how this lower high and lower low works, and that's a good thing to learn because you can put this or do this analysis on any chart, and you'll see the same thing here on the Nasdaq. Here's the high, low, lower high. I think I need to zoom in on this one a little bit, but I'm not going to take time to do that. You get the idea. The Treasury bonds, look, the bonds really fell off today too. This is a 5-minute chart. I'm going to restore this. And I want to look at the VIX, which is down here. This is the Volatility Index. I'll restore it or maximize it. Here's the beginning of Friday. You can see the volatility was high then in the 30 range, and by the time the day ended, it ended up in the 34 range. It just works inversely to the market. So fear is coming in to the market. Let's restore this. Let's look at the volume here. One thing I do want to point out here is at the end of the day, notice how the volume was increasing in through here as it was falling. We're starting to see some panic selling in the futures anyway. This could be a selling climax. And then, of course, after the market, regular market closed, the selling subsided. Crude light actually fell today. It was up higher and then it came down. The S&P 476 out of 500 are down. The AD line, there were 1,989 more decliners than advancers on the NYSE, and on the Nasdaq there were 2,204 more decliners than advancers. Volume, I'm surprised it isn't heavier on the Nasdaq, but it certainly shot up on the NYSE. Maybe we're getting to the point of a selling climax, but I certainly do not like the lower highs and the lower lows. The monthly lower low on the composite. Let's take a look at the S&P 500. And it is barely above it. You can see that it's right at support. Let's just hope these don't break on Monday, but it's really critical right now. And don't be trying to bottom fish this market if you are. I'm going to cut it off here. If you like this format of me doing different segments intraday, let me know, and I'll try to do these on Friday when I'm here. And I'm not always going to be here on Friday or available, but when I am, I kind of like doing this because you can get a picture of what happens throughout the day. You can see how this market, although it was pretty weak all day, we did see some early morning strength right here, and then it went down. But if you like this, let me know. Ron at High Growth Stock. And if so, I'll continue to do this. Thank you for listening.